because gold is moving to all-time highs, meaning the dollar is moving to all-time lows, it means that the next round of inflation is already here.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 22nd through April 29th, 2024, while supplies last. First, we feature backdated 1-ounce silver Canadian maples at $3.25 over spot. We also have pre-33 AU $10 gold liberties at $34 over a half-ounce spot. And finally, we're offering 90% constitutional silver at just $2.75 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor. Rafi, thank you so much for joining us today.
Thanks for having me on again, Elijah. Good to be here.
Well, it's great to have you. The last few times we've had you on, gold has hit all-time high after all-time high, and we continue to move higher. The last few days we're down a bit, but we did break through the $2,400 level last week. So your perspective on where we are right now and where do we go from here?
Where we are right now, well, if we treat gold as not a currency, it's money, but if we as a currency, as you would look at, let's say, the dollar or Japanese yen contract, then the dollar is getting weaker in terms of real money. And usually when that happens, price inflation, as the Keynesians describe it, is not far off in terms of accelerating. We also see that I kajiggered a chart showing how copper prices are very predictive of CPI numbers. It's the CPI numbers. I don't think they're honest or anything. It's not that I ascribe any power to them, but they do affect psychology, and I think they will be a factor in letting people loose and changing their mentality from, it's the economy strengthening to, it's the dollar falling. Because really all inflation is really the dollar falling, and the economic growth through inflation is all an illusion. It's hard to tell when it's slow because they can mask it. So I think because gold is moving to all-time highs, meaning the dollar is moving to all-time lows, it means that the next round of inflation is already here. And you can even see it in the CPI numbers now, but it's about to get a lot worse. And then the question is, what's the Fed going to do when it gets worse? And the only thing they can do is raise rates. But people are still in the false Keynesian conception that raising rates lowers inflation, what people call inflation. But that's only true when your currency is not 93% backed by debt that depends on interest rates. So all central banks are in the same problem now. If they raise rates, prices go higher. If they cut rates, prices go higher. So in that sense, I think we're in an unavoidable beeline to the end game. Doesn't mean there won't be wiggles. There will be, but the trend will be more obvious as the weeks and months ahead. And you can see that in the progression of articles that have come out over the last few months. Some starting with, there's going to be 4 rate cuts this year, and then 3, and then 2, and now 1. And now I just saw the first article that maybe there won't be any, and maybe we're in a Volcker-like situation. And don't worry, even if we raise interest rates high enough, everything will be fine eventually. And if inflation will be conquered, just like Volcker did, except Volcker didn't have to deal with $35 trillion of debt at 20% rates. It would bankrupt everything, and it would destroy the value of the dollar because, again, the dollar is backed by 93% debt, which plummets in value when you hike interest rates. So there's no way out of it now. We're headed there. It could take months, but the trajectory is really coming into focus now.
It does seem like the whole narrative about rate hikes has been changing with little impact on the markets. It seems like we might be seeing a bit of weakness here in the stock market, but back at the beginning of the year, it seemed like we were expecting multiple rate hikes. But now, there is talk, as you mentioned, that we might not have any rate hikes this year. Your perspective on how the markets are going to be really digesting this change in Fed expectations?
Well, they're already changing. We're already seeing gold move higher, and we're seeing gold move higher because there's going to be no rate cuts. It would move higher it would move higher if there were going to be rate cuts, but that's what's so hard to really internalize, that whether you hike rates or don't hike or cut rates, it's going to go higher. But you see, like on every piece of news that inflation's higher, or that there's going to be fewer rate hikes, gold goes up. That just proves that we're already in the late 1970s scenario here, which is exactly what happened back then, right? The interest rates that Volcker kept hiking didn't bring gold down and didn't bring prices down until I only learned this recently, but he had to hike rates to 20% 3 times from 1980 to 1982, and eventually gold calmed down. But what Volcker didn't really understand is once you get gold to calm down, then eventually prices will start to fall. Just as gold leads prices higher, when it falls, it does prophecy. You could say that eventually consumer prices are going to go lower, because consumer prices are the last to be affected in any economic system, because they're the farthest away from the commodity space, which is the initial production stage. And by the time prices affect consumer goods, it could be months to years out, just by the nature of production.
Now, as for how silver is going to be affected, you recently reported on how during the 1980s bull, or during the 1970s bull market in gold, it wasn't until 1979, really 1 year before the end of the bull market, that silver really started taking off. So your expectations for silver as we head into this new bull market?
Yeah, well, you were saying that in the 1970s bull market, let's say 1971 to 1980, silver did pretty much nothing in gold terms, at least, from 1974 to 1979. Didn't do anything. It stayed in a trading range with gold at about 35 to 40 per ounce, 40 to 1 ratio. And then all of a sudden, in 1979, it just went all the way down to 15 very quickly. And since I come from the Austrian school, I always look for a human action element in these type of things. And I think the explanation is pretty simple. Like the silver is the public's money, and it doesn't have much to do with banks. Banks don't have much to do with silver. They have to do with gold. Which is why the gold price is really rising now, because it's the banks that are in trouble, and they're the ones that trade money and currencies. But when the public finally does wake up, what happens is they look at the gold price and like, I can't afford that. How am I going to eat? So before you have a rush into any good and service, what Mises calls the crack up boom, or the flight to real goods, you have the public, at least the wise public, going into silver first, and they'll just buy it and return it to the public, because again, the silver was the public's money. And it's going to return to be the public's money. It's never going to be the bank's money. It's too bulky. It's good for the public, which is why 1873 was really the first the first real crime of the monetary system. The gold standard enabled inflation, because prior to 1873, we were on a bimetallic standard. Even that wasn't great. What we should be on is two monies, two derivatives of money. Right? You should have two separate currencies. One, let's say, is like a gold dollar, and the other is like a silver schmaler, whatever you want to call it. It doesn't matter. But if there's two separate derivatives for two separate monies, and then like dollars and cents, they would change every day depending on market forces, that would be the ideal system. It would have to be honest. So I do think that when the public does wake up and they realize that the dollar is collapsing, and they're trying to retain their savings, the wise people of the public will first go into silver with whatever they can afford. And then once that's gone, or once even silver is too expensive, then you start the real hyperinflationary process, where people take whatever dollars they have and they just buy whatever they can get. So right before we see a hyperinflationary crash, we're going to see silver go to 15 to 1. And then around 15 to 1, that should, I know this is an extreme statement, but I don't see any other way out of it. Once we see 15-to-1, I think the dollar will either freeze at a gold ratio that backs the Fed's liabilities by 100%, or if there's no gold in Fort Knox, it'll die completely, and then we'll have to start over, which is scary, but also glorious in the fact that all the insanity that is built up will dissipate because nobody will have any need for it.
And maybe part of that insanity is what we're seeing in the cryptocurrency markets. It seems like over the last couple of years, we've kind of been in this mania where, everyone, all the people that I know, all the people, the person changing my car battery is talking about cryptocurrency, right? Your perspective, it seems like, is that during this reset, during this end game, we're actually going to see people flee from cryptocurrency and into precious metals. So why do you think that cryptocurrency, Bitcoin, is not the safe haven or the alternative currency that a lot of people right now are thinking it is?
Because it doesn't exist. I don't think I've answered the question this way before, but I recall maybe I was 24, 25 when I read Atlas Shrugged first time. That was my my first, not my first, but it was a big step towards me becoming libertarian. And I have problems with Ayn Rand, and I'm not a Randian or anything like that. I'm not the next Alan Greenspan, God forbid. But I remember there was this chapter in of John Galt's speech in Atlas Shrugged, where he like Ayn Rand likes to go into these like long winding like speeches of her characters where she like just like lets out her philosophy in this very pompous way, and it's annoying. But she starts it off with existence exists. Like, and I was reading, I was like, what? Okay, like why are you starting with that? And then I read it and I was like, okay, it could be a lot shorter, but I get it. So like I would say to the Bitcoin people, like, existence exists. Bitcoin is a code. It's a series of data. It's ones and zeros, but it's a code to what? What's it a code to? Like people, like they say, oh, it has all the properties of money. Well, the code does. Yeah, you can divide it into Satoshi units. You can transfer it really easily. It's fungible. All the things that gold has that make it money, Bitcoin has it. And Bitcoin has it even better. Bitcoin has all the stuff that gold has that makes it a good money even better, except for the fact that it doesn't exist. That's the thing. And then people say to me, well, what do you mean it doesn't exist? Who are you to say what exists? I'm a physical being. I can see what exists and what doesn't exist. Like, if you can't accept the fact that existence exists, there's nothing really to explain. It's not. There's nothing there. It's you're chasing somebody else's fantasy, and that's all. So like, what's a dollar? Why does a dollar exist? Because the dollar is the other side of the Fed's balance sheet, and the Fed has gold and debt, and the debt has value as long as it can be paid in the dollars that are still backed by the debt and the gold. It makes it a circle that goes in on itself, yeah, and eventually it will fly apart, yes, but for now it has value because the debt has value because it can be paid in dollars that are backed. But again, it goes in a circle. Like, but Bitcoin doesn't exist, and nobody can convince me that it does. So if it doesn't exist, it's nothing.
And ultimately, I mean, the dollar, it seems like it's backed by the debt, and the debt is kind of, I guess you could say the dollar is in some sense attached to gold, but really, that gold window is closed, right? So you can't just redeem dollars for gold anymore through the government or through banks. So it seems like a similar thing will happen to the dollar, where people will see that, wait, it doesn't really exist.
Well, you can redeem dollars for gold, just not at the central bank. You can redeem them for gold at Miles Franklin. The minute that no longer works, then that's it. It's dead. I mean, just because you technically can't do it at the Federal Reserve, they still have it on their balance sheet. Let's just assume. I'm not. I haven't done any research. I'm just assuming that they have it. But I see a gold standard in a much more broader sense than just, can you go to the Fed and have them redeem it for you? Because that's generally what happens in like, let's say 19th century sort of banking crises, where they have a suspension of specie payments, right? During a suspension of specie payments, where banks no longer provide you with gold and silver in return for your derivatives, for your receipts, for your dollars, or whatever it is, then it's not like they plummet to zero once there's a suspension of specie payments, and you can't say, oh, it's no longer backed by gold. Well, it's not backed by gold at that ratio. So if banks are suspending specie payments in the 19th century, what would you do? You would go to a coin shop or somebody who has gold and say, look, how many dollars do you want for this? The bank's going rate is whatever, $30 or $21, but they're closed right now because there's a bank holiday. So how many dollars will you take for an ounce? You'll say, well, what, 25, 26, whatever. So it's still there. It's just not being paid by the banks. This is just that same thing, but in a more centralized system. So once nobody trades any amount of dollars for any amount of gold, what happens is the gold retailers become banks. The banks become bankrupt. Everything flips on its head, and we start anew.
Now, when it comes to what is happening with the banking system right now, I know high interest rates are putting pressure on the banking system, as we saw last year. UBS was the bank that took over Credit Suisse. Now, UBS itself is having issues and needs credit, right? So essentially, they need a bailout. Your perspective on that and the broader banking system?
Yeah, I noticed that. It wasn't actually me that noticed it. It was a subscriber. It was an in-game investor subscriber that sent me this article about UBS, which tells you something that they're not putting it in the headlines, and they're using different language, right? I think it said UBS has capital needs up to $15 billion, right? Capital needs, and they need to make it more robust. So that's just nice language for bailout. And it's going to happen, but the fact that they're specifically not putting it in the headlines, it's not surprising because the mainstream financial media is all bootlicking the powers that be, as we all know. And so if UBS needs a bailout, then other banks are going to need a bailout again, because in an inflationary system, that's what you always need. And what else are we going to do? So if we go back to rate hiking, right? What caused the regional banking crisis was the fact that the bonds that were on their balance sheet were falling in value, and they needed a bailout. So the Fed took that crap onto its balance sheet and made the dollar even weaker, and gave them dollars instead, gave them reserves instead. So if we're indeed in a Paul Volcker situation, and we're only at, let's say, 4.6% now, and we hike to, let's say, 10%, 15%, like Volcker did, then how much trouble are the banks going to be then? They're going to be dead. It's not even going to be a question. I wonder what the words to the title to that article is going to be. Like, instead of dead, what are they going to say? In the afterlife, or bank afterlife, and there's a bunch of angels there, and they look great, and you congratulate the bankers for making it to heaven, something like that. I don't know.
Now, when it comes to, I guess, how this is going to impact the average person, it's like, it seems like if we're seeing cracks again in the banking system, how should that concern anybody? Because, I guess the government could bail the banks out again, but this gets back to kind of the end game is, what is the value of the dollar going to be at that point?
Yeah, people make a big deal out of what path exactly the powers that be are going to take, or the government's going to take. Are they going to do bail-ins? Are they going to do bailouts? The truth is, it doesn't matter, because either way, it ends up the same thing. Your dollar will be worthless. If they do bail-ins, it's technically more honest, right? If they just take your money and then purge it out of the system, or they could print more money and try to reinflate the system. Either way, you end up with nothing. So don't worry about the method by which they're going to do it. It's all theft in the end, right? There's three ways for government to raise money. There's direct taxation, which is theft, and you could argue that a certain amount of theft is necessary, or if you're a minarchist, you could say that. And the other thing they could do is borrow. And since they borrow generally for war or stupid regulations that cripple production rather than help it, then that money is going to be paid out of more taxes. Or the third way is inflation, but it's all stealing. So they're going to steal until you've got nothing. So take what you have and put it in a place where they can't find it. That's the safest way to go. And it includes if you have retirement accounts, IRAs, 401ks, whatever these numbers and letters are, they're going to take it all, either through the value of the dollar or just through confiscation. Well, we saw that Biden wants to put a 44% capital gains tax now. So what they could do is an IRA, well, a special government emergency, anyone who holds gold in an IRA. I'm not saying they're going to do this, but it's possible. Anyone who holds gold or silver in an IRA, there's a special windfall tax of 90%, and it goes to the government. No one's going to stop them. So I can see that happening too. So you really got to hide it. What else can I say?
I guess it's getting back to the basics, right? Of like, we don't know the details of how this is all going to play out, but we know the basic strategy, right, of getting our assets outside of the system.
Yeah. And they control the whole system. They control retirement accounts. They control pensions are retirement accounts. They control everything. They control the insurance funds, everything they got. So what do they not have? Maybe they don't have your backyard. Or maybe they do. I don't know. They're not going to be able to take everything. It's not going to because once they really fall apart, that's one of the blessings of hyperinflation. It happens so fast that the government doesn't have time to regroup and say, okay, we're going to do this. They can't even get together and plan because they're too big and clunky. So things just break down. And then the hope is that you end up with somebody like Milei, and he's not perfect. And I know there's problems with him, but you got to commend him for what he's doing in Argentina. And I don't think it's going to succeed in the end, but at least it's a good direction. And so we hope that something like that happens in the West, in the United States. But I can't promise it will. So you just got to be safe and be around a good community. And
in any specific strategies or new thoughts on that with respect to preparation, and also we can't just have a bunker ourselves or whatever. We need to build a relationship so that if we do enter a worst case scenario, an end game, as you talk about, we have our friends and family around to help us survive as well.
Yeah, well, if you have a closed circle of production and barter. I don't mean barter one thing for another thing. I mean barter with gold and silver, which is monetary exchange. If you can build up networks, then you can have transactions that are not tracked by the government. You pay for your meat in silver. You pay for your garden supplies in silver or gold or whatever. The more people you have involved in this that are transacting in coins with one another, the harder it will be for the government to track them. So we're going to have to do this together. It's not about everybody building a bunker. That's not efficient, right? Insurance works by pooling risks. So what you want to do is pool your risks and get people together and say, I have skills and I'm willing to trade them for gold and silver. Let's build the network out and separate as much as we can. And this is especially important for healthcare, right? Because you don't know what the doctors are up to these days and who you can trust for your health. So you want to get out of that too. And it's not just the monetary system; it's every system. It's education, it's medicine, it's monetary. It all starts with the monetary system, right? Because the inflation infects everything. It makes people not necessarily stupider, but following their where their bread is buttered by who prints the money. So if the government controls everything, the government controls everyone. Unless you want to be bold enough to speak out, in which case you can get censored and destroyed, or be small enough to stay under the radar, which is kind of my hope, until the end comes and I can peek out and breathe a deep sigh of relief and help whoever I can.
Well, Rafi, if our viewers are interested in learning more, did you want to remind them where they can find you? And did you have any last thoughts?
I would love to remind them where they can find me. You can find me on the endgameinvestor.substack.com. You can subscribe there for free. If you want to become a paid subscriber, then you'll get all my 3-4 times a week commentary on gold and silver markets and the banking system. I do put a portion of my articles for free every time, so you can sort of get a style for where I'm going. Or you can check me out on YouTube. My channel is Rafi Farber. I try the more scared I am, the more humor I use, because it's the only way I can control my fear. It's the best way I can control my fear. Just laugh at it, because what else am I going to do? Looking at the world fall apart as it is, and just being thankful that I got through college in the U.S. before what's happening now to my people. It's very scary. And my last thoughts is it will be okay when this is over. I just don't know how. But there's no option in thinking that it won't, because that's not going to stabilize you. The saying, if you think it will be okay, it will be okay, it's less of like a magical statement than if you think it will be okay and other people think it will be okay, they will be able to operate in a way that will make things okay. So that's what you got to keep in your head.
All right. Well, Rafi, really appreciate your time today, as always. Thank you so much, and God bless.
Thank you, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 22nd through April 29th, 2024, while supplies last. First, we feature backdated 1-ounce silver Canadian maples at $3.25 over spot. We also have pre-33 AU $10 gold liberties at $34 over a half-ounce spot. And finally, we're offering 90% constitutional silver at just $2.75 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.